Okay, my dear friends, very good afternoon. So let me just check if I'm audible clearly or not. Yes, let me just check if I'm audible clearly or not. Okay, my dear friends, very good afternoon. So let me just check if I'm audible clearly or not. Yes, let me just check if I'm audible clearly or not. Okay, perfect. Very good afternoon to all of you. I am CA Supreet Agrawal, your faculty for ACCA, AA and AAA syllabus. My dear friends, today is day 2 of our entire AAA syllabus revision, and today we are going to take up some of the most important chapters which are going to be somewhat around 30 to 35 marks in your examination. So today we are going to take up completion, review, reporting, evidence and testing and group audit. So these 3-4 chapters we are going to take up today. Although these are very big chapters, but once we complete this chapter combined with day 1 revision, you will be having a complete revision of the entire AAA syllabus. However, whatever are the remaining chapters that might not be directly asked in your examination or that might be very less, so we are going to take up it in day number 3, which is tomorrow at 8 p.m. The timings are different because it's a work day, so 8 p.m. would be the timing so that all of you could join as well. Okay, so I hope that would be the plan and I hope you will enjoy this plan. Okay, so now first of all, if you are not still connected with me on YouTube, Telegram or Instagram, I would request you to please scan this QR code so that you can connect with me on Telegram, Instagram and YouTube as well. Although you might have been seeing this video on YouTube only, so you are already connected on YouTube, we are going to come up with a lot of revision videos, with a lot of exam tips, with a lot of examiner report analysis. So I would request you to please subscribe to this channel. Okay, now when I talk about the Telegram channel, so what all things are going to be shared over there? So for example, these notes, the notes that we are talking about, these notes might be shared over there, so that is going to be very helpful for you. Okay, and if I talk about Instagram, so short clips, short reels, short tricks to remember certain important concepts would be shared over there. Okay, so that is how we are going to structure our content across all social media platforms. Now let's discuss about, I hope by now you might have scanned this QR code. Now let's discuss about what all things we are going to cover today. Okay, so first thing that we are going to take up is evidence and testing, which is chapter number 8 from your AAA syllabus, evidence and testing. So we are going to take up that today. After this, we will be going for the completion, review and reporting, and at the end we are going to take up the group audit also, right? However, group audit is placed at the beginning, so we can take it in the middle, so we can take it in the middle also. Okay, as you all suggest, no worries on that. We will have a little chat about it once we are about to start that. Okay, now let's talk about chapter number 8 first. Okay, let's have full focus about chapter number 8 first, because this is going to be a very important chapter, because this comprises of all of your ISA 500 standards. So ISA 500 series is majorly covered in chapter number 8, ISA 500 series as an audit evidence. So that is covered in this particular chapter. Okay, name of the chapter is evidence and testing. Name of the chapter is evidence and testing. Now let's talk about what it covers. So it covers ISA 500, which is audit evidence, ISA 530, which is audit sampling, ISA 230, which is audit documentation, ISA 505, which is external confirmations, ISA 580, which is written representations, and at the end ISA 510, which is initial engagements, that is for opening balances. That is how we are going to cover this particular chapter, not the today's session, the chapter number 8. Okay, but we are going to have a quick revision, so we will have to pace up a little, and whenever you feel difficulty, please feel free to reach out to me. You can comment down on the chat box also. I would be happy to respond to you over there also, and just in case if you feel difficulty, you can also reach out to me on my Telegram or Instagram channel. Okay, now all of those channels are named as ACCA with CA Supreet Agrawal. Now ISA 500 audit evidence, let's start with this. So the auditor must design what? Sufficient and appropriate audit evidence to draw reasonable conclusions on which to base the audit opinion. That is what are audit evidences? Audit evidences are the evidences which auditor obtains to base their audit conclusion or audit opinion. When I say sufficient, so it means size of the samples, and when I say appropriate, it means quality of the samples. Now quality might have relevance, and reliability. Quality is decided by whether the sample is relevant and whether it is reliable or not. Okay. Now, similar thing is written over there: sufficiency, quantity, appropriateness, quality. Quality includes relevance and reliability. When I say reliability, so reliability is driven by multiple factors. For example, written is more trustworthy than oral. Original is more trustworthy than photocopy or copied, right? Independent source, independent source is more important or more reliable than the dependent source or internal source. Okay, then where controls are effective, that is the evidence for items where controls are effective would be more reliable than for ineffective controls. Okay, that is very, very important. So if evidence is not achieved, sufficiency cannot be achieved, because to make it sufficient you have to play with the quantity, that is quantity should be sufficient. So if evidences are not achieved, sufficiency cannot be achieved. For example, can this happen that you have received very few samples but they are very, very reliable? Yes, that could happen. But can it happen that you have received very less samples and it is sufficient? Maybe not, right? Now, factors to consider. So what factors to consider to decide sufficiency and appropriateness of audit evidences? I would be writing S&A for sufficient and appropriate and AE for audit evidences in the revision session. Okay, we cover a lot of examples in our regular classes, but here we are just going to cover up a revision. Okay, now risk of material misstatement. Higher the risk of material misstatement, more evidence is required. Higher the risk, higher would be the evidences. Nature of internal controls. If internal controls are not reliable, more evidence is otherwise less. Reliance on effective controls, that is whatever control testing we have done, if the results of that is reliable, if is effective, then we will have lesser samples, otherwise more. Then cumulative audit knowledge experience, this is whatever knowledge experience you have had from your past experience with the client, then not your personal audit experience, with the client. This is talking about with the client. So cumulative audit knowledge experience with the client, cake with the client. Okay, so more cake with the client, lesser evidence is required. Now materiality, higher would be the materiality, lesser would be the sample. Is it true? Yes. Higher would be the materiality, lesser might be the samples, because you might be able to ignore a lot of items. You might be able to say that all of these items are immaterial, whereas if the materiality is low, then you will have to take more and more number of samples. Okay, now, and similarly, if there is more material items, then you will have to do the more testing. Now, audit findings. If the results from other audit procedure is reliable and they are not suggesting that there could be any material misstatement, then you will have to take lesser samples, otherwise more. Source and reliability. If the reliable source is there, then you will have to take lesser samples, otherwise more. When I talk about appropriateness, it talks about relevance and reliability. Relevance, whether the obtained evidences addresses the relevant assertions or not, right assertions or not. Whereas when we talk about reliability, all of those factors that we discussed, written over oral, independent over internal, direct over indirect, consistent with other audit evidences, original over duplicate, effectiveness of controls over ineffective, that plays a very important role over here. Okay, you can also remember it as WIDCOE, WIDCOE. That is how you can remember it. Okay, I hope this is clear. Now, information given by management's expert is considered as internal. That is, when we discuss ISA 600, we discuss that what is management's expert, what is auditor's expert. Let's discuss about one expert which is of management. Say the person, the actuary that is conducting the gratuity calculation. Now that person is not hired by us. That person is hired by the management to conduct certain operation which is not from accounting or finance knowledge, right? Accounting or auditing knowledge. So that is called as a management's expert, and the evidences that are generated by them is considered as internal only, because they are hired by management. They will submit their report to the management. Now, understanding the test objectives. Okay, so when a client provides information, the test objective is to see if anything is missing. Understanding the test objective, that is when client provides information, objective is to see if anything is missing, that is understatement or overstatement. Okay, when you will have to check the understatement, what procedure you will perform. When you will have to check the overstatement, what procedure you will perform. Let's talk about the overstatement first. Whether management has increased their revenue, inflated their revenues. So agreeing what is on the list, back to supporting evidences, that is we will take any sample from the list, from the Excel file maybe, in a practical case, and we will link it to the supporting documents, that whether the supporting document shows the similar amount of sale or not. Whereas when we talk about the understatement, Understatement. So determine source of information, that is when you are thinking that there could be certain information which might be hidden by the management, understatement could be there. So you will have to check what is the source, and you need to check whether there is any other evidence, any other information that could be obtained from that source which is not mentioned over here. Test if everything has been included, that is you have to verify from the ground level to the sheet, from the ground level to the sheet, that is you have to evaluate whether something has been covered or not, and you have to check it to the sheet whether that has been covered or not. Okay, that is how you need to do it. Now let's talk about the sources. So sources could be risk assessment procedures as well as further audit procedures. Under further audit procedure, you will perform test of controls or substantive procedures. Okay, under substantive procedures also analytical procedures are there and TOD are there. Okay, that is how we need to structure it. Okay, I hope this is clear. Now risk assessment procedure includes understanding of the entity, so understanding internal controls, suitability of design and implementation. This must be supplemented with test of controls and substantive procedure, that is they are not able to give, or they are not capable of giving any audit evidences in a sole manner. Okay, now when I talk about further audit procedure, this is very important. When I talk about further audit procedure, this includes test of controls and substantive procedure. Test of controls basically means understanding the process and testing the controls that management has said that these controls are available in our company. So testing that, having a walkthrough of the controls and then testing it. So effectiveness of operation as well as design. So test of controls includes both design as well as operating effectiveness. When operating effectiveness is expected and when substantive procedure do not provide sufficient appropriate audit evidences, that is what happens is sometimes the further audit procedures are not giving much of the audit evidences, but we are sure of one fact, that operating effectiveness might be there. Okay, so then you can verify the test of controls as well. And substantive procedure, which includes TOD as well as analytical procedure, I'll write it over here also, TOD and analytical procedure, TOD and analytical procedure. So to detect material misstatements in FS, substantive procedures are always required for material classes of transactions, account balance and disclosure. This means that for a material account balance or class of transaction or transaction, you cannot conclude anything without having the substantive procedures done. That is, you cannot just use risk assessment procedures or test of controls to do that. Can you do it for immaterial items? Yes, you can only use test of controls to conclude on the immaterial items, although it is not evidently written over directly, but that is what it means. Okay, I hope this is clear. Any questions so far? Please feel free to shoot any questions if you have. Yes, any questions that you might have, please feel free to let me know. Please feel free to let me know if you have any questions so far. No? Great. Now, procedures for gathering evidences. When I say procedures for gathering evidences, what do I mean by it? So, procedures we have already covered ICAIORR. If you remember our regular classes, we have already covered ICAIORR, right? I'll also write it over here. ICAIORR. I stands for inquiry, C stands for confirmation, A stands for analytical procedure, again I stands for inspection, then O stands for observation, R stands for recalculation, and again R stands for reperformance. What all are these procedures we have already covered in our regular classes. However, if you have any confusions over these procedures, because this is derived from AA, please do let me know on the chat box. Okay, otherwise we'll move forward. So once you write on the chat box, that's different, otherwise we'll move further. Okay. Okay, now how to answer in exams? Now this is very important. How to answer in exams? This is very important. Now address the relevant assertions. Okay, address the relevant assertions. Recollect accounting entries. We have to see the accounting entries and evaluate accounts and assertions affected, and design and perform audit procedures as well. So address the relevant assertion, that is not just inspect invoice, but what details to be inspected in invoice that you need to mention. For example, it could be invoice number, it could be date, it could be percentage of tax, etc. Okay, then recollect accounting entries, and you have to check that what all accounting entries are there and what could be the possible risk, and then you have to design your audit procedures and design and perform audit procedures. Then you have to write that these are the procedures that we will perform. So this is basically risk, and this will give you guidance on procedures. Okay, I hope this is clear. Now automated tools and techniques. This is one topic which was covered as a separate chapter also in your AA syllabus. So automated tools and techniques, automated tools and techniques. So what could be the meaning of automated tools and techniques? What could be the meaning of automated tools and techniques? See, when I say automated tools and techniques, when I say automated tools and techniques, when I say automated tools and techniques, it means that there are certain things which is used in the electronic format or in the format of digitalization in the process of audit. For example, initially there used to be the manual papers on which accounts used to be created and audited, right? Now you can see that there are multiple tools through which you can verify different items. Say analyzers are there. You can also use certain tools to create your report also, to draft your report also. That analyzers are there. So that is very, very important. So technology driven tools and methods used by auditors to streamline. Technology driven tools, that is the only explanation that is given over here. Technology driven tools and methods. Technology driven tools and methods, that is the only explanation that is given over here, used by auditors to streamline, enhance or perform a specific task in the auditing process. But what do you need to remember? Technology driven tools and methods. Okay, I hope this is clear. Now let's talk about the examples. So audit software could be there, that is inquiry programs could be there. Audit software as in, say for the purpose of process understanding, I used to use one enabler where there used to be the initiation of the transaction, the processing of the transaction, the recording of the transaction, and the reporting of the transaction. Then test data. Sometimes what happens is, by using the technology, we test one data. For example, if client tells me that once we enter the PR and we approve it from here, it goes to the purchase manager for approval, and then once they approve, then it gets converted into the purchase order. So we generally write it, we generally test it through a dummy data. And data analytics, that could be used for the purpose of PPE, inventory, etc. That could be used for PPE, inventory, etc. For example, in my case, I have personally used it for depreciation, for payroll analyzers, for payroll inspection. Now, data analytics. What is data analytics? So see, in simple terms, if I tell you what you can write in the examination also, data analytics is nothing but just the conversion of raw data into actionable insights. So for example, if I tell you that I have the student data of ACCA directive, I have the ACCA directive with me. Now I have to evaluate that what all could be my potential students for the AAA program. So what evaluation I need to do? Anybody who is in knowledge level, that is not my target audience for this attempt. Anybody who is in skill level and is appearing for say second or third paper, then they are not my target audience. But anybody who is appearing for the last paper of their skill level, that might be my option, that might be my target audience, because in a particular case, when they move to the strategic level, they might choose SBR as well as AAA, right? Now this is very, very important over here. Now similarly, if anybody who has appeared for AAA but has not cleared it but are good with the concepts, that might not be my target audience for the regular batch. Similarly, anybody who has just completed SBR might be my target audience, right? So this is conversion of raw data into actionable insight, and now I'll decide that how to promote my services into this audience. So that is data analytics. Science of examining raw data to draw conclusions about the information, that is create actionable insights. That is conversion of raw data into actionable insights. Okay, now audit applications could be used. So analytical procedure to identify threats could be used. Control testing could be done through data analytics. Three-way matching between invoice, GRN and PO. Now segregation of duties, that is ARCC, authorization, recording, custody, comparison. Then substantive procedures to check validity, okay, fraud detection and general analysis and communication. In these places, data analytics could be actively used. When I talk about the benefits, therefore, definitely there would be lesser time, more efficiency, so more productivity and cost savings, enhanced audit quality, reduced audit risk, etc. Why enhanced audit quality? Because now you are incurring lesser time, so you will be giving more time towards the judgment also. You might be able to identify more and more relevant risk also. When I say reduced audit risk, what do I mean by it? Since we are using the data analytics, so detection risk would go down, and therefore the audit risk would also go down with it. With this, we have completed this particular standard, which is ISA 500. Now we can go to the next standard, which is ISA 520, that is analytical procedure. Once we complete that, we can have a 2 minutes break for us. Okay. ISA 520, which is analytical procedures. So meaning evaluation of financial information through analysis of plausible relationship between both financial and non-financial data. That is, this is analysis of financial and non-financial data to draw plausible relationships. Okay, so evaluation of financial information, that is, you are evaluating financial information only, but through what? Through relationship, plausible relationship between financial and non-financial data. Okay, so analysis of financial and non-financial data to draw plausible relationships to evaluate financial information. That should be your goal, to evaluate financial information. That is, ultimately the financial information is going to be evaluated, but the way of doing that is this one. Okay, now I hope this is clear. Now encompass necessary investigation of identified fluctuations, inconsistent relationships and significant differences in expected values. Methods may include simplistic comparisons, ratio analysis, as well as advanced statistical technique like regression analysis. That is, they might help in necessary investigation also. They might encompass necessary investigation also, because what happens is, once we do the data analytics, once we do the analytical procedure, what happens is there could be certain variance analysis that could be observed. So this fluctuation could definitely be understood as variance analysis. Okay, so whenever there is any variance, then this help us, analytical procedure help us to evaluate what are the variances and what procedure we need to perform. Okay, now purposes. So I'll tell you that risk assessment procedure. So analytical procedures are performed at 3 levels. One, at the risk assessment level, we discussed about preliminary OAR. If you remember, preliminary overall analytical review, that once we obtain the financial statements from the management, we first conduct preliminary OAR. That is at the risk assessment level. That is analytical procedure only. Then at the execution stage, whenever we try to audit any item, say rent, say revenue, say packing expenses, we do the analytical procedure. And at the completion stage also, for the partners review, we do one more analytical procedure, that is called as overall analytical review. So to perform risk assessment procedures at the planning stage, to obtain relevant and reliable audit evidences using substantive analytical procedure at the execution stage, and to design and perform analytical procedure at the overall review stage, that is at the completion stage. So this is planning, this is execution, this is completion. I hope this is clear. Now, must be used at planning and review stages at, however, depends on auditor's professional judgment to obtain sufficient substantive audit evidences. That is, it is mandatory to be used at planning and completion stage, but during the execution stage, if they want to use it or not, that is the auditor's call. Okay, now analytical procedure at the planning stage should be updated throughout the audit as material adjustments are found, ratios affected are then reconsidered, and further work is undertaken as necessary. That is, analytical procedure can also result in revising the audit strategy and audit plan, because whatever are the results of the analytical procedure, based on that we decide whether any changes are required in audit plan or audit strategy or not. Then exam question may require you to suggest reasons for changes in ratios with implication on planning. That is, a lot of students make this mistake, that what they do is they discuss on that this is the ratio, this is the basic analysis, that's it. But what all factors has led to the changes in the ratios, what all are the further risks, what the auditor should do in a particular scenario, that should also be mentioned over there. Reasons for changes should also be mentioned over there. Okay, now uses analytical procedure. So you can find the relationship between elements of financial information expected to conform to a predicted pattern. Example, gross profit margin to sales. So we can say that 20% was in last year, so this year why 25%? What has led to greater gross margin percentage? That is between two financial information, and it could be between one financial information as well as another non-financial information also. Say payroll cost to average employees. So financial information and relevant non-financial information. Example, payroll cost to the number of employees. So this is also important. Please remember it, that there could be financial as well as non-financial relationship. That is finance and non-finance. Okay. Now types of procedures. So there could be trend analysis. When I say trend analysis, what do I mean? When I say trend analysis, what do I mean? When I say trend analysis, what do I mean? I'm reading your comments also, just in case if you have any queries, please feel free to post also. Don't worry about it. Okay. Now, yes, trend analysis, that is something is following the trend, whether it has moved, whether it has fluctuated, whether it has deviated or not. So whether items are moving in the expected trend or not. When I say ratio analysis, calculation of ratios and evaluations, that is what happens is we calculate the ratios. Say current ratio was 1:1 last year, now it is 1.2:1. Why there is a change and what is the implication of it on the auditor's report? Then reasonable test whether something is looking reasonable or not. I personally did it for the purpose of packing material. In one of my clients, what happened was that there was a case going on regarding the packing material, case as in discussion going on regarding the packing material, that packing material is used too much, it is a very expensive packing material. So I did the rationalization that last year we made these many boxes of sales and this was the packing material. Why this year there is an increase of 2x? If there is an increase of 2x, there could be increase in material cost, there could be increase in labor cost, there could be increase in the wastages. So we identified that it was wastages. Whether actual data seems reasonable as per expectation or not. Then let's discuss about the ratio analysis. So there are 3 ratio analysis: performance ratios, liquidity ratios and efficiency ratios. Also my friends, I would like to tell you that if you are facing any trouble in this ratio, if you are facing any trouble in these ratio things, okay, what you should do is you should evaluate and check if you need revisions. If you need revisions, please feel free to go to CA Vishal Jain sir's channel, and what you can do is you can have a quick revision of your FR as well as SBR revisions, okay, SBR concepts, IFRS concepts. So the channel name is Vishal Jain, okay, ACCA with Vishal Jain, that is the channel's name. Please go and watch FR and SBR revisions, okay. That will help you to brush up any of the concepts that might be required for your AAA syllabus. That is covered in very brief. I think somewhere 10 to 15 hours only, so you will be able to brush up everything, okay. Now liquidity ratios. So current ratio, interest coverage ratios, performance ratios, profit margins ratios, efficiency ratios, receivable collection ratios. So this performance ratios could also be called as profitability ratios. This liquidity ratios could also be called as solvency ratios. How do you need to calculate it? You might be knowing it from your FR and SBR syllabus. Just in case if you have any difficulty, please feel free to go here and revise. Efficiency ratios, these are known as activity ratios, okay. That is how we need to cover it. Now higher than expected example. So how do you need to frame your answer? Higher than expected GP margin, gross profit margin is higher than expected. Then there could be fraudulent sales also, there could be lesser cost also, there could be more amount of sales also. So increased risk of overstatement of revenue and understatement of purchases. That is just the risk. We are not doubting the management unless there is a reason to do so, but that could be the risk. Higher than expected current ratio indicates an increased risk of overstatement of current assets and understatement of current liabilities. That is, if the current ratio was expected say 1:1, but it is coming out to be say 2:1, then there could be either more current assets than we have imagined, than we have evaluated, or there could be lesser current liabilities that we have thought about, okay. Now with this we have completed the basics of ISA 520. Now let's go to the technical discussion of it once more. So analytical procedure is there. The author should do what? Obtain sufficient, evaluate whether the substantive analytical procedures are sufficient or not, evaluate the reliability of underlying data, and develop an independent and sufficiently precise expectation to identify misstatement. Do you need to remember this? Definitely not. You do not need to remember this. You need to remember the verification or evaluation of financial information, evaluation of financial elements via plausible relationship between financial as well as non-financial data, okay. Now AP as an analytical procedure do not provide direct evidence, or that is, they do not provide direct evidence of what? The existence of assets or liabilities and rights and obligation. That is, these two are the assertions which are not addressed by analytical procedure. If tomorrow somebody asks you that what are the assertions which are not addressed by analytical procedure, so it is the existence, because you cannot evaluate the existence of a particular asset or liability via analytical procedure via plausible relationships, right? Similarly, for rights and obligation, whether something belongs to you or not, you cannot do it through the analytical procedure, that we will verify all the previous ownerships and we will evaluate that you are the rightful owner. We cannot do so. Now generally more suitable where strong internal controls and transactions are there, because you will be able to frame plausible relationships over there. My friends, why I am keeping the pace a little faster? Because this is audit subject. I understand that you might feel like if I go very slow, you might feel like you are wasting a lot of time, you are investing a lot of time, and therefore what I want to do is I want to make the best out of this time in the lesser time possible, in the most lesser time possible. So please try to understand with me this particular concept, and please try to revise with me to the best of my capabilities, to the best of your capabilities. Just in case if you face any trouble in any of the concepts, please feel free to comment. I would be happy to help you there also, okay. So that is something that is very important for all of us, okay. Now let's talk about reliability. When I talk about reliability of data, This is not reliability of audit evidences. A lot of students make this mistake. Then when the question is asked on reliability of data for the inadequate procedure, they end up writing the reliability of audit evidences for the audit evidences. That is not important. Okay, reliability of data is something different, which is for how much reliable would be the base data, the source data on which the inadequate procedures are being performed. For example, I told you about one relationship between payroll cost and average number of employees. So that number of employees, how reliable it is, that is the question here. So factors that influence reliability: what is the audit objective and extent of reliance, whether whole information is available or disaggregated, that is whether some employees, whether every department is submitting their number of employees, or whether it is at the centralized level. Centralized level would be more reliable. Availability of financial and independently prepared non-financial data. Then source of information is dependent or independent. Say if the gratuity person is giving you the number of employees, then it would be more reliable than the in-house. Comparability of information, whether the information is comparable to the last year or not. Say the information format has been changed, so it might be difficult now to evaluate what is the change exactly, right? Then cumulative audit knowledge experience, that we have discussed. Nature of business and operations and effectiveness of controls. If effectiveness of controls is there, then it would be very difficult for any person to play with the employee data. In summary, the expected use of inadequate procedure will be highest for existing well established clients. In summary, the expected use of inadequate procedure will be highest for. Now this is important question that could be asked, that for which clients inadequate procedure could be most important, most reliable. So existing well established clients, they have their process sorted, they have their internal controls placed, where predictive information is available. Sometimes what happens is there are certain clients where predictive information is available, that is you can predict the information, so that is important. Where internal controls operate effectively. Where internal controls operate effectively means what? That where internal controls are there, and they operate effectively, that is they are designed and operating effectively. Now as the assessed risk increases, the acceptable difference between the expected and actual inadequate procedure decreases. That is, there is an inverse relationship between what is the expected level of risk and the acceptability of difference. If risk is high, the difference that would be acceptable would be low. If the risk is low, the difference that would be acceptable would be higher. So that is important over here. Similarly, the auditor must use professional judgment to determine when and what further investigation is required. Now near the end of the report, and with this we will be completing this particular standard also, and now we will be taking a 2 to 3 minutes break. Okay, now near the end of the audit, so AP, that is inadequate procedures, are performed at the end to help form an overall conclusion about whether the financial statements are consistent with the auditor's understanding of the entity. This is done through what? This is done through OAR. Okay. Similarly, the aim is to corroborate or contradict conclusions formed during the audit of the individual elements of FS, similar to those carried out when understanding the entity at the planning stage. So it could be performed at 3 levels, but it is mostly performed at the year end also, just to evaluate whether the auditor's understanding is appropriate or not. Now, in about 30 minutes, that is 31 minutes 50 seconds, I can see we have revised the 2 standards that are very important for us, approximately 18 pages. Okay, today we have to complete 82 pages. Out of those 82 pages, we have already completed 18 pages, so that is very good. Okay, now let's take a 2 to 3 minutes break, then we will move further with the further standards. Okay, so now let's go to the next standard, which is ISA 530, which is audit sampling. ISA 530, which is audit sampling. My friends, what is sampling? Sampling as in that you have an entire population and you want to draw out certain samples from it, right? Now these samples could be based on your judgment, this could be based on certain methods. So we are going to discuss about all of them over here. Okay, so I am audible and visible clearly. I have checked it. Now selection of samples. So how do you need to select the samples? You can select all items. For example, there are 2 samples only. You can select the entire population. Selecting specific items, say anything that crosses 1 lakh rupees, and audit sampling could be there. This third method, that is audit sampling, is something that we are going to study over here. 100% samples should be selected when a small population is there or where very high risk is there. Selecting specific items would be when high value items are there, material items are there, and audit sampling in all other approaches. Okay. Anything applied to less than 100% of the population is called as applied to sampling only. That is, sample means anything less than 100%. If it is 99.5%, it is still considered as samples only. Now terminologies. When I say anomaly as in some outlier which is not generally followed in the population. So outliers, say for example, if I tell you that I have 100 employees and all of their salaries are processed in bank only, but there is one employee whose salary is processed in cash, so that would be considered as anomaly, outlier. Misstatement or deviation, that is demonstrably not representative of the misstatements or deviations in the entire population. Population as in the entire set of data, say 100 employees in this particular case. Sampling risk, the risk that the conclusion derived by verifying those 10 samples out of those 100 employees, and the conclusion that would have been derived by verifying the entire 100 population would be called as sampling risk. That is the risk that is conclusion, the risk that the conclusion derived by verifying this 10 samples, and the risk and the conclusion that would have been derived by verifying this 100 sample could be different. That is called as sampling risk. Anything which is not driven by size of samples, that is called as non-sampling risk. Sampling risk that alters conclusion based on a sample may be different from the conclusion that would be reached if the entire population was subjected to the same audit opinion, same audit procedure. This is something that we have already discussed in the day 1 lecture also under the planning stage. Non-sampling risk not related to sample size. Okay, tolerable misstatement, the misstatement up to which the auditor could reasonably tolerate without changing the audit opinion, without modifying the audit opinion. So highest monetary amount of misstatement that the auditor could accept and still conclude that the population is not materially misstated. Tolerable misstatement cannot exceed performance materiality. Now it's statistical sampling. Statistical sampling involves use of 2 things: random sample size and probability theory. Random sample selection and probability theory is there in statistical sampling. Non-statistical sampling, anything which is not statistical is called as non-statistical. Okay. Now in statistical sampling, 2 sampling methods are not allowed, which is haphazard and block selection. What are these methods? We are going to just discuss in the next part only. Now non-statistical sampling, any approach which does not fulfill all conditions of statistical sampling, that is, even if one condition is not fulfilled, it is called as non-statistical sampling. It includes non-random selection and evaluating results on a judgment basis, that is, judgmental sampling is there. Now for the purpose of sample selection, there are multiple stages that are relevant. So sample design should be there, size should be there, selection should be there, audit procedures, that is performing audit procedure, testing and evaluating results. Design as in what type of samples would be selected, size as in how many samples would be selected, sample selection, final take out the samples. So design matters to be considered in designing the samples. What is the objective of the test, whether you want to select for TOC, TOD, rent agreement, for which assertion, nature of audit evidences, whether they are reliable, persuasive, conclusive, whether population is complete or not, or whether you need to take out multiple samples, characteristics of the population, whether that is reliable or not, what will be regarded as a deviation or misstatement, that is, what amount would be said that this is misstatement, whether the approach will be statistical or non-statistical, that is very, very important. Now sample size. When I say sample size, it should be sufficient to reduce sampling risk to an acceptably low level. Acceptably low level. Generally, lower the acceptable sampling risk, greater would be the sample size. That is, sampling risk would be lower, the greater would be the sample size. Now, could be determined statistically or through professional judgment. This sentence is something that could be asked in the examination by saying that, comment on this. See why this is true. Let's understand this first of all. Okay, sampling risk, that the conclusion derived by verifying the samples and the risk that the conclusion derived by verifying the entire population might be different is called a sampling risk. So, if this is the sample verification, this would be the population. So if this is sample verification, then only this is the room. If this is the sample verification, this is the room for difference. So that is why lower the acceptable sampling risk, higher would be the amount of samples, greater would be the samples. Now selection, let's discuss about the selection part over here. So all sampling units, that is all particular samples, must have a chance of selection, and that too equal chance of selection. Methods, random selection could be there, that is randomly without using any methods. Systematic could be there, systematic as in first, 20th, 40th, 60th, every interval. Haphazard selection without any judgment, without any reason, purely judgmental. Block sampling, consecutive or adjacent units are taken, say 1 to 20, all items are taken. Monetary unit based on monetary weights, that could be there. So random selection, selected using random number tables or a comprised random number generator. Selected using random number tables or a comprised random number generator. Systematic or interval selection, uses constant interval between items selected. Example, every 20th voucher. Monetary unit sampling, the weights of amount is given. So each unit has the sample chance of selection, but the likelihood, this should not be sample, this should be equal. Okay. Now likelihood of each item in the population be selected is value weighted. Value weighted as in value weighted averages given. So higher the value, higher will be the chance of selection. Haphazard selection does not follow a structured technique, that is unstructured. Block selection, all items that are adjacent are selected, say 1 to 20th, all items are selected. Testing, how the testing needs to be done. So appropriate audit procedure must be performed on the selected items. Now this appropriate procedure could be ICAI, ORR, anything. If an appropriate item is selected, an appropriately chosen replacement must be tested. That is, if by chance you have selected inappropriate item, say you wanted to test sales, you have selected a sample of sales return, so you need to replace it and you need to check it again. If planned procedures cannot be performed, a suitable alternate procedure could be performed. Inappropriate procedures is there, appropriately chosen replacement should be tested. Planned procedure cannot be performed, suitable alternative procedure should be performed. Say inquiry could not be performed, there could be inspection also. Evaluation of results, how the results needs to be evaluated. So the sampling risk should be reassessed if projected and uncorrected anomalous misestimate exceed the tolerable deviation of or misestimate. So test of controls could be there and test of details could be there. Test of controls, if controls do not appear to be operating effectively, modify procedures. In test of details, if misestimate exceeds tolerable misestimate, you have to perform more procedures. In this case, in controls testing, you can extend the sample size if the controls are not following the due process. Test alternative controls and extend substantive procedures also. These could be the parameters. Extend substantive procedures as in you can increase the test of details or analytical procedure also, or you can increase the sample size for TOC only, or you can test a different controls if for one risk there are multiple controls. Whereas when we talk about misstatements, so request management to adjust for identified misstatements. If management refuses, then we know what to do. Then reevaluate uncorrected misstatements, that is uncorrected misstatement would be reevaluated, and what we need to do that we will be discussing under the completion and review stage. Then projecting misstatements. Now this should be the last topic of this particular standard. Yes, so projecting misstatements, this is important. Projecting misstatements means what? Projecting misstatement means when you are trying to project, when you are trying to extrapolate the misstatements identified in the samples to the entire population. So generally what needs to be done? See, I'll explain you with the help of an example. Population is 1 lakh. Okay, sample value is 20,000. Isolated misstatement, that is not representative of the population, is 10,000, and actual misstatement is 15,000. What you need to do? Actual misstatement 15,000. You need to extrapolate it to the population, but you need to extrapolate it only to the 90,000 amount, because this 10,000 is anyways the misstatement. So in 20,000 worth of samples, 15,000 is misstated. So 15,000 divided by 20 into 90,000, not 1 lakh. Why? Because 10,000 is anyways misstated. So 67,500 plus this 10,000 isolated misstatement is 77,500, and this is something where you do not need to make the mistake of 10,000 adding 10,000. This is something which is very, very important. Now let's talk about the next standard, which is ISA 230 audit documentation. My friends, this standard is important because this contains the retention period also. This contains about what kind of audit evidence needs to be, audit documentation needs to be done. So I'll tell you in brief, whatever documentation auditor needs, auditor performs, whatever procedure auditor performs, auditor needs to have a documentation of it, that they have performed it. In one of my experiences, I can tell you that my seniors used to say in the auditing profession that work that is not documented is not done, because the audit documentation is literally that much important. Why it is important? Because it helps you evaluate what work has been done. It helps you evaluate what kind of evidences have been obtained. It helps you evaluate what kind of conclusion has been reached. it also helps you to identify that which person has done what work, so accountability is there. It also helps you to understand that how you will be dealing with the reviews. If tomorrow there are reviews, then how you are going to deal with it, what procedures you are what procedures you have done, and it gives you evidence of what evidences you have obtained, what you have tested, and what procedures you have performed. In short, it helps you to prove that you have performed your audit as per the relevant standards, as per the requirements of the relevant standards. What should be the extent of this audit documentation? So the extent of this audit documentation should be such that an experienced auditor, who the person who has relevant experience of the auditing profession, the person with the relevant audit experience with no previous connection to this particular audit should be able to understand that what all are the procedures performed, what all are the evidences obtained, and what is the conclusion that has been reached. Okay, what should be the retention period? So the retention period is generally 5 to 7 years. We will be discussing about it. Definition: record of audit procedures performed, relevant audit evidences obtained, and the auditor's conclusion. Scope includes audit programs, analysis, briefing documents, summaries. Do you need to mark it up? Definitely not. Purpose: primary purpose is to provide evidence of basis for the auditor's conclusion and that the audit was planned and performed in accordance with ISAs, like we have discussed. Additional purposes: increasing the economy, efficiency, and effectiveness, planning and performing, assisting in planning and performing, facilitates direction, supervision, review, helps in retaining records for future, creates accountability among team, and facilitates quality and external reviews. Now, documentation prepared after the audit work has been performed is likely to be less accurate than documentation prepared at the time such work is performed. Therefore, it is advisable that once you perform the work, you need to hand in hand document it as well. Extent: audit documentation should be prepared to the extent that sufficient to enable an experienced auditor having no previous connection to the audit to understand audit procedures, evidences, and matters arising and conclusions reached. That is very, very important, and this is one of the most important questions of this particular standard board for your AA as well as AAA syllabus. Now let's talk about factors to consider. Let's talk about factors to consider. What are certain factors that needs to be considered while designing the audit documentation, while deciding the nature of the audit documentation. So what is the nature, size, and complexity of the entity? If it's a small entity, lesser documentation should work, but if it's a more complex entity, say a listed entity, then definitely the documentation needs to be appropriate and documentation needs to be more and more. If higher risky items are there, then documentation should be appropriate. If lesser risky items are there, you can decide the documentation on the professional judgment. Reliance placed on control effectiveness is if controls are more and more reliable, you can say that documentation should be appropriate. Extent of judgment required: if there is more judgment, there should be more documentation. Audit methodology and tools used: for the standardized part, you can skip the documentation, but for the exact part where you have taken a judgment, you should have the more and more documentation also. Extent of direction, supervision, and review: more direction, supervision, and review, more documentation would be required to enable everybody to perform their reviews appropriately. Standardization as in whether audit documentation could be standardized or not. This is just an extra topic in your audit documentation, not relevant for your examination, but I'll just tell you that it should be tailored for each client. It should not be standardized to the level that you are not able to identify that which client it is for, and keep up to date for changes in ISS, IFRS, and laws and regulations. Okay, so it should be updated also. For example, if you have created a standard work paper for, say, insurance, okay, now for this insurance, whatever are the updates, you have to keep in updated. Permanent versus current audit file: permanent audit files are those files which are used for multiple years. Say engagement letters are there, previous year auditor files is auditor report is there. Whereas when we talk about current year audit file, this is relevant for this year. Say external confirmations obtained, say audit evidences obtained. So engagement letters, legal documents, understanding of client's business, previous year signed FS, checklist, questionnaires, written representation, board minutes copy. There will be only one PF and CA for each stage of the audit. Say for interim, there would be one permanent audit file and current audit file, whereas for finalization stage also one interim audit file, one permanent audit file, and one current file. Now significant matters. This is very important, so please try to understand it very, very carefully. Okay, so all significant matters must be recorded, including details of discussion with appropriate client personnel, details of discussion, that is minutes also, and written representation must be obtained wherever required. That is for all significant matters, all discussions should be recorded and written representation should be taken whenever required, and you have to maintain an evidence, a file of or documentation file of that also. Any necessary departure from applying ISS must be recorded. That is, if you have not followed any ISS, departure from applying ISS must be recorded, including the reason for departure and how the audit objective was achieved under the circumstances. Then usually a separate summary document is prepared to record significant matters, which is generally called as SRM, and how they were resolved. This is SRM, summary of review memorandum. I hope this is clear. Now assembly of working paper files. So it should be reviewed and signed off before the auditor signs the auditor's report just in case if anything has been done later on. So administrative task is allowed, but other than that, if anything is done, then you have to keep a record of who has modified it, when it has been modified, and why. Cross-referencing should be there within 60 days of the date of auditor's report, but administrative task could be done. After the final assembly, the auditor should not delete any documentation until the completion of the retention period. What is the retention period? We are going to discuss here. And if any modification is done after final assembly, the reason of modification and who has done it and who has reviewed it, that should be mentioned over here. Custody. So ACC recommended minimum period is audit working papers 7 years and text files 7 years, but if I talk about ISA 230, it's 5 years, at least 5 years from the date of the auditor's report. So in the examination, what you should write both. As per ISA, it's 5 years. As per the relevant ACCA body, it is 7 years. So therefore we will have to keep 7 years to comply with both requirements. Other points, working papers are the auditor's property, not the property of the client. Some extract could be made available to the client based on the auditor's discretion. Okay, extract from working papers may be made available to the client at the auditor's discretion. A client may require the auditor to disclose documents belonging to the client only to a third party. That is, if certain documents belongs to the client only, then they can ask the auditor and they can force the auditor to show it to the other parties also. With this, we have completed this particular standard. Now the time of ISA 505 external confirmations. Yes, ISA 505, tell me, ISA 505, anything that you already know of? Anything that you already know of? Yes, anything that you already know of? Anything that you already know of? Okay, so we have discussed in ICAI ORR, that is C stands for confirmation, right? C stands for confirmation. These are external confirmation. This is the most relevant form of any audit evidence because it is direct, it is independent, it is written, right? So ISA 505 external confirmation. So audit evidence as a direct, obtained as a direct written response to the auditor from a third party, the confirming party. Factors needs to be considered: materiality, level of risk, and conclusion from other audit evidences. If IR and CR is assessed as low, substantive procedure may be limited to TOD rather than through confirmation. That is, for less risky areas, we generally do not take confirmation. So for which areas we generally take confirmation? Debtors, cash and bank balances, etc. Now factors to be considered: open or closed. Open as in we'll leave the space blank and we'll allow them to confirm the amount, whereas closed as in we'll mention the amount and we'll just ask them to confirm whether it is correct or not. Competence of the other party, independence of the other party, and other characteristics of the respondent. Type of information respondents will readily confirm. For example, if we ask them for all the transactions during the year, they might not be able to confirm. If we ask them for the closing balance, they might be able to confirm. Management's authorization to respondents to disclose information requested. That is, management authorization letter needs to be sent with the confirmation letter that management has asked them to disclose the information to the auditors. Otherwise, they will not be submitting. Positive as well as negative is there. Positive as in what? We say that you need to respond whether you agree or not. Negative as in you only need to respond when you disagree. So agreement or disagreement, and only in the event of disagreement. Okay, that is important over here. Now if management requests not to confirm certain information, alternative procedure must be performed, but we need to understand from the management why they are refusing to confirm, and there could be doubt on the management's integrity also. When I talk about confirmation process, this is important. The auditor should have control over the selection process, sending confirmation requests and receiving responses also, to minimize risk of sample bias. Process: constructing a sample, you select the samples. Letter requesting confirmation, you draft the letter, you take the management representation letter. On receiving request, on receiving responses, you agree or reconcile the references, and for non-replies, you perform the alternative procedures. Now with this, we have come to ISA 580, which is written representation. This is nothing but an acknowledgement from the management that they have submitted us all the information. This is the only document or the evidence that you can take for the purpose of management's intention. That is, whenever we say no, as per the intention of the management. So this is the only document that shows that what is the intention of the management, because here management writes everything and signs it. So to confirm management responsibilities and to support other audit evidences. Written representation provide necessary audit evidence, but they do not provide sufficient audit evidences on their own. That is, they can be used as a corroborative audit evidence, but they can never be used as a simple or direct audit evidence that is on which to base our opinion. Now, management responsibility for the design. They talk about management responsibility for the design and implementation of internal controls. Management believe that the aggregated uncorrected message statements certified by the auditor are not material. Management's acknowledgement of responsibility for fair presentation of FS as per AFRF. Management's approval of the FS. Written representations to support other audit evidences needs to be obtained only if required by ISS or determined necessary by the auditor. Written representations to support other audit evidences need to be obtained only if required by ISS or determined necessary by the auditor. In view of their importance, written representations that are critical to obtaining sufficient appropriate audit evidences must be provided by TCWG rather than management. If there are concerns about the competence, integrity, ethical values and diligence of management, the auditor must consider the reliability of representations and audit evidences in general. If management refuses, then you have to discuss the reasons with the management, establish if other audit evidences is available, and if no satisfactory solutions, consider the implication for the auditor's report as well. This is very, very important. Okay, now with this we have moved to the last standard, which is ISA 510, initial engagements, opening balances, and after this we will be taking a 10 minutes break, and then we will be moving forward to the next chapter, which is, I think, group audit. Okay, we will be going for that after a 10 minutes break only. Okay, so when I talk about initial engagements, opening balances, first of all you have to decide that what are opening balances. Opening balances are so first of all you have to decide what are initial engagement. Initial engagements are those engagements which are being done by the current auditor for the first time. Say last year was unaudited, this year is audited, so this is first year. Last year was audited by another client, this year is audited by another auditor, this year is audited by another auditor, that is also first year. Last year was audited by us only, and this year also by us, then this is not a first year. Okay, so opening balances, transactions of prior period, accounting policies applied in prior period, matters existed at the beginning of the disclosure. Okay, requiring disclosure. Do not contain misstatements that materially affect the current period's FS. Any changes to accounting policies have been appropriately accounted for or not, that needs to be checked. For audits of PIs in UK, the auditor is required to obtain an understanding of the predecessor auditor methodology sufficient to communicate with those charged with governance. Matters to consider: appropriate accounting policies were selected or not, consistently applied or not, whether there are any changes, if there are any changes, whether they have been accounted for appropriately or not. This is somewhat similar to what you have already studied in FR and SBR. Whether prior periods FS were audited or not, if yes, whether the opinion was modified, and whether the matters have been resolved or not. If not, the current year opinion could also be modified if back needs to be checked, and if not, then we have to see. Correct roll forward of prior year closing balances is done or not. Nature of accounts and risk of material misstatement in current period's FS, whether there is any update from last year or not. Materiality of opening balances related to the current period's FS. Now procedure: prior reporting period audited by another auditor, prior reporting period audited by another auditor, prior period auditor's report. Okay, so if they were audited by another auditor, so review most recent FS and auditor's report for relevant information. Review predecessor auditor's working papers if available. For audits of PI in UK, predecessor auditor is required to grant the auditor access to the additional report to the audit committee in respect of previous years. Whereas when we talk about prior periods auditor's report, so pay particular attention in current reporting period to the effect of matters that resulted in a prior year modified opinion, material uncertainty related to going concern, section of emphasis of matter. Audit conclusions and reporting, this might not be very relevant, that is why I have just read it. For audit conclusions and reporting, insufficient appropriate audit evidences will give rise to qualified opinion or disclaimer of opinion, because this is insufficient, not sufficient. Please do not get confused over here. Opening balances containing misstatements which could materially affect the current period's FS will result in a modified opinion. That is, if current year is there, if opening balances are there which is misstatement that are relevant for current year also, that will still result into modified opinion. Inconsistent accounting policies that are not properly accounted for in adequately disclosed will similarly give rise to qualified or adverse opinion. Now this is the most important line: if the predecessor auditor's opinion was modified, the audit opinion on the current period's FS will only be modified if the matter remains relevant and material, otherwise it will not be modified. With this we have completed this entire chapter. If you see, 44 out of total 82 pages, somewhat I will say 80 pages, 44 pages, that is approximately more than half was this chapter only. Now we have covered more than half of the revision. So what we can do, we can take a 10 minutes break now, and then we will be moving further to chapter number 11, group audits. Then we will be completing completion and review and reporting. All of these three will be completing in one go only, not an issue. Okay, so let's take a 10 minutes break. So now let's start with chapter number 11, which is group audit. Chapter number 11, which is group audits. Let's discuss. Let's start with chapter number 11, which is group audits. So under this, we will be covering ISA 600, and it does not apply to joint auditors or predecessor auditors, or when group auditor concludes that FS of a component are immaterial. Okay, so all of these three situations, it does not include group audits. Otherwise, group audit includes everything else which is covered under ISA 600. Okay, now the group auditors should determine how the work of the component auditors will affect the audit. That is, it is the professional judgment of the group auditor to determine that whether the work of the component auditor, that is the component, that is the individual subsidiary, will be affecting the group audit or not. Let's discuss about the terminology, that is group and component. What is group, what is component? Okay, so what is group? Group means that it includes and taken together all the subsidiaries. So for example, company A is there which owns company B, company C, company D. Okay, now all of these taken together are called as group. Whereas when we talk about one component, say B, C or D individually, that is known as component. The auditor of the group is called as group auditor. The auditor of the component is called as group the component auditor. The management of the group is called as group management. The management of the component is called as component management. So all the components taken together whose financial information is included in the group FS is called as group. And when I talk about component, an entity, business unit or business activity determined by group auditor for the purpose of planning or performing audit procedures in a group audit. Okay, so whatever has not been included in the group, that is not considered in the group. Okay, so when joint auditor conducts an audit, the joint engagement partners and their engagement team collectively constitute the engagement partner and engagement team. Now group performance materiality, so that is the amount set by the group auditor at below the overall materiality for the group as a whole to evaluate and to ensure that the aggregation risk is not there. Now ISA 600, so this talks about leadership responsibility for quality rests with the group engagement partner. That is the leadership responsibility with the group engagement partner, not the component engagement partner. Okay, group auditor continues to be responsible where the group audit partner determines whether or not the group auditor is able to obtain sufficient and appropriate audit evidences to form an opinion on group FS. Planning which components require audit work to be performed as part of the group audit procedure require consideration of relevant factors such as newly formed or required components, components with significant changes, high risk events or transactions. Group auditor has the responsibility to obtain an understanding of the group, its environment and the AFRF and the system of internal controls and to respond to such risk. Now let's talk about the communication. So the communication at the acceptance or continuance stage, the planned scope and timing of the audit including the work to be performed across the group should be communicated by the group auditor to the group management. That is, group auditor will communicate to the group management whatever communication is relevant for the entire group as a whole. Okay, now fraud should be communicated in a timely manner to the group management. Fraud should be communicated to the group management on a timely manner. This is exactly like ISA 240. No changes are there. Following information needs to be communicated by the group auditor to those governance. Against the information are going to be similar what we generally communicate. So audit work at components and involvement of group auditor, concerns about work of component auditor and how to address these two are relevant for the group audit. Otherwise all of them are similar. See, audit work at components and the involvement of group auditor, it concerns about the work of the component auditor, whether they will be working appropriately or not, competence and all. Again, same points. Limitation on scope, any fraud, deficiencies in groups, internal control. So this is specific for group audit. Otherwise, everything else is same as ISA 260 and 265. Okay, now the documentation, what should be the documentation that should be maintained, what should be the level of documentation that should be maintained. So for a group audit, the documentation should also contain the following: any limitation on scope and how they were addressed, any limitation on scope or how they were addressed. Group auditor's determination of components for the purpose of planning and performing the audit, that is how they have determined the components. The determination of component performance materiality, that is for component what would be the performance materiality, for the group what would be the performance materiality. Evaluation of component auditors used, whether they are capable or not. Details of group system of internal controls, similar requirements, similar internal controls would be evaluated, competency, objectivity, independence would be evaluated, DSR of component auditors work would be evaluated, all communication with the component auditor should be kept, and group auditors responsive to the component auditors finding whatever findings competent auditor has submitted, what are the responses of the group auditor, whether they consider it material or not and how they want to deal with it. Okay, now issues when a component is located abroad. So similar issues are there which could be there in an international audit. Different accounting policies could be there. There could be cultural problems. What is interpreted in a certain way here might not be interpreted in the similar way. There issues specific to the country might be there. For example, something might be considered, say debtors might have a policy of 30 days in India but only 5 days in say America, right? So correct classification of investment is also important. So control, if you have control, that you have studied in FR and SBR. If you have not, please visit the channel of CA Vishal Jain sir. What you can do, you can type ACCA with Vishal Jain, you will find the channel. You can go and see the FR and SBR revisions to determine control. What is control? It leads to a subsidiary. When it is significant influence, it leads to the associate classification. Procedure should be review board minutes and discuss with directors of the parent. Now, when I talk about consolidation audit procedure, what is important over here? So, calculation of goodwill and any impairments is important. Cancellation of any intercompany balances should be there. These are adjustments that you must be doing in SFAR and SBR for the consolidation. Provisions for unrealized profits, fair value adjustment, retranslation of FS from overseas components, correct classification and valuation of components in parents FS. That is very, very important, and this is something that you need to remember also. These are just FR and SBR adjustments that you might already know. So that is why I am flowing from here, and if you have any concerns, you can feel free to reach out to me on this. Okay, I am just reading the comments. If there are any comments, no, I don't feel there are any comments as such as of now. Now, implications for the auditor's report, whereas subsidiaries, here the spelling is a little wrong, subsidiaries. Okay, implications for the auditor's report where a subsidiaries report is modified. Implications for the auditor's report where a subsidiaries report is modified. So materiality for the group as a whole is determined by the group auditor. Therefore, impact of a modification to a component auditor's report on the consolidated opinion is a matter of judgment for the group auditor. So materiality is determined by group auditor. So impact of modification to a component auditor's report on the consolidated opinion is a matter of judgment for the group auditor. That is whether their report has been modified, whether it has any effect over the group auditor's report, that is a professional judgment. Now let's talk about joint audits. When when two or more auditor joins together to do an audit, that is known as joint audit. Why it might be doing so? So because of a collaboration, nobody wants to leave their old auditor, so there could be joint audit. There could be less risky, there could be more risk, so more auditors should be taken in consideration. There should be expertise required, there could be location challenges. So audit where two or more auditors are responsible for an audit engagement and jointly produce an auditor's report. New acquisition could be the reason, client presence in multiple locations could be the reason, and foreign subsidiaries could be the reason. You have to consider the experience and standards of the other firm before accepting such. Both firms should sign the audit report. For the whole audit they are responsible, but for individual areas they are themselves responsible individually. So there is a work report that is created which is for which areas who individual firm is responsible, and there should be certain common areas where everybody would be responsible. But one such common area is the presentation and disclosure of financial statements. For that area everybody is responsible. Okay, I hope that is clear. Now transnational audits. This came in our yesterday's discussion also, and we said that we will be discussing it today. So transnational audits are the audits where the report is issued in one country but it is relied upon by the members of the another country. So audits where the FS may be relied on in a different country to where the entity is based. When I say issues in transnational audits, so again the same issues like we face in foreign subsidiaries. So difference in audit approaches, cultural differences could be there, and issues specific to the country could be there. But there is some specific guidance which is given over here, which is IASB has set up transnational auditors committee to support and provide guidance to forum of firms. Specific responsibilities of TAC, which is transnational auditors committee, includes identifying audit practice issues, discussing best practice, identifying members to serve on committee, acts as a formal channel for interaction among firms. With this, we have completed this particular chapter of group audits. Now we have to do what? We have to complete finalization, completion and review, and then the reporting stage. Once we complete that, we will be sorted on the AAA syllabus, because we would have completed approximately 80 to 90 marks of your syllabus, 80 marks of your syllabus approximately. Okay. Because you will see in all of the papers, almost approximately 80 marks is from this part only. Now we have roughly 35 to 40 minutes left, and we can easily complete it, not an issue. Okay, just in case if you have any doubt, please feel free to let me know. We can discuss those doubts as well. Yes. Okay, you can find my Telegram link also in the description. So if you want to connect with me on Telegram to get these notes, please connect with me and you can raise the request over there as well. I hope this is clear. Okay. Okay, I hope everything is going fine. The audio, video, everything is working appropriately, not an issue. And I have seen the doubts also. You guys have not pushed any doubts, so that's amazing. Okay, just in case if you have any doubts, please feel free to reach out to me even now, even later also, not an issue from mine. Okay, now covers. This particular finalization, completion and review covers what? ISA 560 subsequent events, ISA 570 going concern, ISA 710 which is comparative information, and ISA 720 which is auditor's responsibility relating to other information. Okay, now let's talk about it. Why final review? Why final review is important? Final review is important to evaluate that whatever we have done has been done appropriately as per the relevant standards or not, whether all the relevant evidences have been taken care or not, whether the conclusion that is made is representative of the verification that we have done or not. So audit has been carried out in accordance with SS or not, then all material issues have been properly dealt with or not, the auditor's report is consistent with the work performed or not, and audit work supports the audit opinion or not. Then types of review. So the audit engagement partner could review and EQR could also review. Audit engagement partner would focus on high risky areas and look for interrelations between different items of the financial statements, and they will be more professionally skeptical. Whereas when we talk about the EQR, they are required for audit of FS of listed entities. Now, before the auditor's report is signed, these two reviews are conducted. Matters to be documented, that is very important over here, that all critical matters must be documented before concluding on the audit. What could be considered as certain critical matters? Say provisions and contingencies, subsequent events, going concerns, uncorrected message statements. These could be considered as certain important parameters. Analytical procedure must be designed and performed near the end of the audit to assist when forming an overall conclusion. With this, we have completed the basics part of it. Now let's come to the standard ISA 560 subsequent events. This is something that you have already studied in your FR, but whatever you have studied in your FR and SBR, let me tell you that that is wrong. That is wrong. But FR is wrong. So how can FR be wrong? But my friends, I'm not saying that it is completely wrong. It is wrong when you see from the point of view of audit. Why do I say that? In your FR, what do you cover? From the date of the auditor's report up to the date on which the FS are authorized for issue. Up to the date on which the FS are authorized for issue. Whereas here we talk about date of auditor's report and fact that become known after the date of the auditor's report. Date of auditor's report, not when FS are approved for issue. Date of the auditor's report and facts that become known after the date of the auditor's report as well. Events occurring between the date of FS and the date of auditor's report and the facts that become known after the date of the auditor's report. Okay, that might be very important. So end of reporting period, this is timeline, FS authorized, date of auditor's report, FS issued. Now we are going to discuss about three events, event 1, event 2, event 3. But before that, there are certain events which are called as existing event, there are certain events which are called as non-existing event. These are similar to what we have discussed in FR and SBR, that is existing events are those events which gives further information to the events that existed at the reporting period end date, and non-existing events are those events which only give extra information that might be relevant for us. Non-existing events only requires disclosure, whereas existing events requires adjustments in the financial statements also. Now we are going to discuss about three events, event 1, event 2, event 3. Event 1 has happened after the FS has been authorized but before date of auditor's report. Event 2 has happened after the date of the auditor's report up to the date FS are authorized, and event 3 has happened after the FS are issued. So event 1, before the date of the auditor's report. Once we complete these three events, going concern standard is done. Subsequent events standard is done. Event 1, before date of auditor's report. So auditor needs to be proactive before the date of the auditor's report that what are subsequent events could be there. That is why we check the subsequent status of all the provisions, we check the subsequent status of all the payments that needs to be received, debtors, creditors, everything. You need to read minutes of meeting, you need to inquire of lawyers regarding status of litigation and claims, you need to inquire of management regarding any subsequent events they are aware about, new borrowings, guarantees, any planned investments, any planned new issue or shares, and any unusual accounting adjustments. If the auditor becomes aware of events which materially affect the FS, the auditor must consider whether they are properly accounted for and adequately disclosed or not. When I talk about event 2 after the date of the auditor's report, but before the FS are issued, so management should inform auditor as the responsibility lies with the management because auditor has already issued their report. Auditor should consider if FS needs amendment. If required amendments done by management, then withdraw old auditor's report, extend audit procedures, verify the new information and issue new auditor's report. Whereas if required amendments are not made, then you have to discuss the issues with those charged with governance, not management, those charged with governance. And if FS released without amendment, take action to prevent reliance on the auditor's report. Then event 3 after FS are issued, event 3 which is after FS are issued. If FS are issued, then what you need to do? Auditor has no obligation to inquire unless auditor becomes aware of a fact that if they have been known, they knew it at the time of issuing their opinion, they would have changed their opinion. So that is important. And if auditor concludes that FS needs amendments, then we have to follow the same steps as it here. That is, they can request the management to make the changes. If the management makes the changes, they will withdraw their old report, they will issue a new report after verification of the new information. Whereas if they do not do so, then we have to discuss issues with the management, and if FS are released, then we will have to take actions to stop reliance on that particular report. Then ISA 570, which is going concern. When I say ISA 570, which is going concern, so whether entity will be able to survive or continue its operation for foreseeable future. Now this foreseeable future is very, very important over here. That is, neither intention is there nor requirement is there to cease the operations. When, what is the period? Period of at least 12 months. Period of at least 12 months from the end of the reporting period is considered as foreseeable future generally. FS should be prepared on a going concern basis. FS should be prepared on a going concern basis unless that basis is inappropriate. That is, FS should be generally prepared on a going concern basis unless that particular basis is inappropriate. Material uncertainties which cast doubt on the appropriateness of the going concern basis should be disclosed. Material uncertainties which cast doubt on the appropriateness of the going concern basis should be disclosed. This is the most important part of the entire chapter. Material inconsistency is there. Okay. Material inconsistency, material uncertainty is the word that is very, very important. Material uncertainty. Whereas when you go to the other information today only, then you will see that the word that is used over there is material inconsistency. Okay, material uncertainty word is used in going concern, where the magnitude of its potential impact and likelihood of occurrence is such that appropriate disclosure of the nature and implication of the uncertainty is necessary for fair presentation and FS not to be misleading. That is, a material uncertainty is considered as material. Any uncertainty is considered as material when the likelihood or impact of it is such that fair presentation of FS would be disturbed or FS would lead to or FS would become misleading. When the going concern basis is not used, the FS should disclose. When the going concern basis is not used, the FS should do what? FS should disclose that fact. Basis of preparation should be disclosed, that what basis of preparation is there other than going concern, say NRV, and why the entity is considered not to be a going concern. That is very, very important, that what is the reason. Say there is a litigation which is going to bankrupt the company, then it should be made available to the users of the financial statements. Then what is the auditor's responsibility? What is the management responsibility? Management has just one responsibility, to assess entity's ability to continue as a going concern. Whereas when we talk about the auditor has first responsibility to evaluate whether management has done it or not, whether management has appropriately done it or not. So consider appropriateness of management's use of going concern basis, whether material uncertainties require disclosure, and to communicate with those charged with governance if material uncertainty exists. These are the responsibilities of the management, and this is very, very auditor, and this is very, very important. Whereas when we talk about one extra point over here which is very, very important is that the auditor should keep alert throughout the audit process for events and conditions that may cast doubt on the going concern. If identified, auditor should perform relevant additional procedures and reassess components of audit risk. That is, what is the level of the risk in the organization that should be evaluated. Now, indicators of significant doubt. So financial indicators could be there, operation indicators could be there, and the indicators could be there. This is similar to what the indicators you study in your impairment standard. You remember in FR and SBI there is impairment standard, so that is something similar. Financial indicators, there is net liability position, that is more than your assets you have liabilities. Negative cash flows could be there. Operation indicators, loss of KMP, labor difficulties are there. Other indicators, example non-compliance, changes in laws, etc. Auditor should ask management if it knows of indicators of significant doubt beyond the assessment period. Now reporting. Going concern basis is appropriate. Reporting going concern basis is appropriate. Reporting going concern basis is appropriate. Note that FS has been prepared on going concern basis. Going concern basis is appropriate, that should be reported whether going concern basis is appropriate or not. If going concern basis is appropriate, we should have a note that going concern basis is appropriate FS has been prepared as per going concern basis. When going concern basis is appropriate but material uncertainty exists, that is uncertainty is there but going concern basis is evaluated that it is there. So adequate disclosure is given or not and not given. If it is not given, then qualified or adverse opinion is given. Mention about material uncertainty under basis for opinion paragraph. This we will be revising just after this in the reporting chapter. What are the paragraphs? Whereas if the adequate disclosure is being given, then unmodified opinion is there, section regarding material uncertainty to going concern is there, and refer it to the relevant note in FS. This we will also cover, but whenever there is a going concern issue, it needs to be referred to FS that this particular note describes what is the material uncertainty and how the auditor has dealt with it. Now going concern basis is inappropriate, so adverse opinion and management is unwilling to make assessment, qualified or disclaimer of opinion. This is very important. So this reporting stage is very important when it comes to the going concern standard. Once we have completed this, now we can move to ISO 710, which is comparative information, corresponding figures and comparative financial statements. Okay, this is very important. Comparative information, corresponding figures and comparative financial statements. What are corresponding figures? You might have seen that in the balance sheet, the last year's numbers are also there in statement of profit and loss also. That is known as corresponding figures. Comparative financial statements, printing the entire last year's financial statement along with the current year. So corresponding figures included as part of the current period FS do not stand alone, and auditor's report only refers to current period FS. That is, they are not considered as the matter for the auditor's report. Auditor do not issue any opinion on that. They do not stand alone. That is, they do not have any readability, comparability or any elements of the FS standalone, and they are included as part of current period FS. Whereas comparative financial statements are included for comparison and do not form part of current period FS. These are the comparative information that is prepared, capable of standalone alone, and auditor's report refers to each period. That is, auditor has to report for each period, which is this year as well as last year. This is not followed in India. Do not worry about it. Now, auditor's responsibility. So the auditor should assess whether accounting policies are consistent, figures agree, and appropriate disclosures are made or not. That is, auditor should agree that whether accounting policies are consistent from last year or not. If not, then whether relevant changes are being done or not. Figures do agree from last year's report, signed report, to current year's report used or not. If there are any changes, we have to discuss about it, and the relevant adjustments and appropriate disclosures have been made or not. Then modified opinion on corresponding figures would be issued if no longer relevant for current year. That is, there was some last year balance which is not relevant for current year, and therefore the changes have been made. So if there are material to comparability, then modified opinion would be issued. Modified opinion includes adverse, qualified or disclaimer. We will be discussing in the next chapter what are these opinions. Still relevant for current year, but if you are in the revision session, I hope that you might already be aware about it. Now, still relevant for current year, then material to year end position or comparability. If it is material to year end position or comparability and it still exists for the current year, it's still relevant for the current year, then also modified opinion could be issued. Corresponding figure should be described as unaudited in OM as in other matter paragraph if not audited. Corresponding figures if not audited could be mentioned as that these figures are unaudited by the auditor, and this should be mentioned under the other matter paragraph. What is other matter paragraph? We will be discussing about it. Now let's move towards the last standard of the chapter, I feel, which is ISO 720. I think the chapter would get completed after this. Yes, the chapter would get completed after this. Then we will take a 2 to 3 minutes break, and then we'll be going for the last chapter, because that is a chapter that we need to understand with a lot of calmness, because that is one of the most important. Sorry, I think I lost the mic. Okay, I got a little excited, no worries. So I was saying that last chapter is very important, because we have to complete it with the best of enthusiasm, because that is the crux of everything we have discussed, which is the independent auditor's report. So we will take a good 2 to 3 minutes to 5 minutes break, and then we will be starting for it. Okay, so the auditor's responsibilities relating to other information. Let me see if I'm audible. Okay, understood. I think everything is audible properly. No worries. Okay, so definition, other information. Other information is what? Financial or non-financial information other than FS and auditor's report included in an entity's annual report. Whatever financial, non-financial information which is included in the entity's annual report other than financial statements and auditor's report is called as what? Is called as other information. Now this is very important to understand over here, that this is not just the FS or auditor's report. There are other financial information, CEO report, CFO report, there could be sustainability report, all of these could be there. Okay, now What is annual report? A document or combination of documents prepared on an annual basis by management to provide owners and shareholders with information on the entity's operations and future outlook together with the annual FS. Now, auditor's responsibilities. Read the other information too. Read. That is what? Read. That is the auditor's responsibility, that read the other information to identify material inconsistency. Please do not use the word material uncertainty, that is used in going concern. Material inconsistency is the word that is used for other information. Okay, I hope this is clear. Now, to respond appropriately when? To respond appropriately when material inconsistencies do appear to exist or other information appears to be materially misstated. That is, whenever there is a problem or whether there is a chance that material inconsistency could appear or other information could be materially misstated, then it is said that appropriate response should be given to. Consider the impact on the auditor's report. Auditor does not report on the fair presentation of such information, only reads it and identify any material inconsistency if there is any. Okay, that is important to understand over here. Yes. Okay, that is important to understand over here. Okay, now audit procedures. To obtain other information, read the other information, discuss any material inconsistency. If not corrected, then communicate with TCWG and withdraw from the engagement. If any other information to be received after the date of the auditor's report, then request management to provide a written representation that the final version of information will be provided prior to its issuance to review. That is, if any other information needs to be issued after the date of the auditor's report, then you have to mention it in the written representation that management will submit it to the auditor for the review purpose. And what if any error happens later on? Auditor will not be able to change the report. No, auditor will be able to change it if auditor feels that would be the facts known after the date of the auditor's report. No, so that could be managed like we have discussed. Now, reporting, a separate section, other information should be included in the auditor's report. We will be discussing it when we move to the auditor's report. This section must include the management responsibility, description of other information. What is other information? What is the auditor's responsibility? Then any uncorrected material misstatement if any, and for listed company, description of other information to be obtained after the date of the auditor report, that needs to be mentioned over here, and a statement that audit opinion does not cover other information, that is also important over here. If audit opinion is qualified or adverse, effect on reporting on other information must be considered, and if disclaimer of opinion is issued, then no other information section should be included in the auditor's report. If disclaimer of opinion is issued that we have not received information, then other information cannot be included as part of the auditor's report. With this, we have completed approximately the full chapter. Now, we have completed 69 pages out of the total pages. Now, we will start with page number 72 and move up to page number 82 after a 5 minutes break. Then we will be covering the independent auditor's report with a lot of calmness, because this is something that will frame part of crux of everything we have discussed so far. Okay, so let's take a 5 minutes break. Then in another 20 minutes, roughly 15 to 20 minutes, we will be covering this entire standard. Thank you so much. Let's meet you after 5 minutes. Okay, hello. Now let's discuss about the independent auditors report. Let's discuss about the independent auditors report. My friends, this particular chapter needs to be studied in very calmness, because this is something that is going to be very important for all of us. Okay, so please try to understand that this chapter is going to summarize everything we have discussed so far in the entire audit syllabus. So please be very patient when studying this particular chapter. Okay, so this cover ISO 700, which talks about forming an opinion and reporting on financial statements, ISO 701, which talks about key audit matters, ISO 705, which talks about the modifications to the opinion, and ISO 706, which talks about the emphasis of matter and other matter paragraph. Let's discuss about ISO 701, forming an opinion and reporting on financial statements. Okay, do not worry, in 20-25 minutes we will be covering it. So forming an opinion and reporting on financial statements. So in forming an opinion, following consideration needs to be taken care of: whether sufficient and appropriate audit evidences have been taken care or not. Uncorrected misstatements are not material, because if they are material, they will lead to modified opinion. FS prepared as per AFRF or not AFRF applicable financial reporting framework. Accounting estimates are reasonable or not. Terminologies used in the FS, for example, property, plant and equipment, for example, current assets, current liabilities, non-current assets, non-current liabilities. The terminologies used are appropriate or not, and P&D achieved to a fair presentation or not. Presentation disclosure achieve a fair presentation or not. Content of audit report. Content of audit report. Title is there or not? Addressee title. So content of audit report means what? Title should be independent auditors report. Addressee to the members, to the shareholders. Audit opinion, that is the opinion paragraph. Basis for opinion, where we tell about that why we have concluded such an opinion. Going concern if required. Going concern paragraph if required, not necessarily if required. Key audit matters, that is must for a listed entity, but for other entities it is not a must. They can have it as a best practice, but please try to understand this we will be covering under ISO 701. The other information, ISO 720, it is again a mandatory paragraph where we need to mention whether we have read the other information or not, and we have already discussed about what information we need to mention under this. Then responsibilities of management and those charged with governance. So responsibilities of management and those charged with governance. Auditors' responsibilities for audit of financial statements. Then report on other legal and regulatory requirements. Say in India we have CARO. Name of engagement partner who is signing the report. Auditor's address and signature. Address as in not the full address, the city. And date of auditor's report. Right? These are the contents. Do you need to remember it? Yes. This is something that you need to remember. For very few areas I say that you need to remember this. So yes, you need to remember this. Okay. Now types of misstatement. I think the spelling is a little wrong here. Misstatement. Okay. Yes. Okay. So types of misstatement. Extract from ISO 450 is there. So types of misstatement. There could be factual misstatement, judgmental misstatements, and projected misstatements. Projected we have already discussed under the sampling part, where we discussed about the calculation part. The isolated misstatement, remember. Factual as in where nobody could say that this is wrong, about which there is no doubt. And judgmental arise from management judgments concerning accounting estimates. Okay. Now with this we have completed ISO 700. Now let's move to ISO 705. ISO 705 includes modifications to the opinion in the independent auditor's report. First of all, you should refrain from writing modifications to the independent auditor's report. A lot of people write modification to the independent auditor's report. That is not true. Modifications to the opinion in the independent auditor's report, that is true. The audit opinion will be either unmodified or modified. The audit opinion will be either unmodified or modified. Okay. Now forms of audit opinion are qualified opinion, adverse opinion, and disclaimer of opinion. But these are forms of modified. These are forms of modified. Okay. There is one more which is unmodified. What is not considered as a modified opinion? So EOM, if you have mentioned EOM paragraph or OM paragraph that you mention in certain specific cases, we will be discussing in ISO 706. Those are not considered as modification. And material uncertainty related to going concern, we have discussed when going concern basis is appropriate, but there is a material uncertainty and the auditor has disclosed it, then also it is not considered as a the modified opinion. Now let's discuss about this. This is a chart that will help you to frame the audit opinions in one go. The definition of the audit opinion, you do not need to mug up anything. This particular table will help you to determine that what is the audit opinion and what is the audit opinion and what should be the definition of the audit opinion. For example, an auditor will issue, an auditor will issue an adverse opinion. For example, an auditor will issue an adverse opinion when there are material misstatements present in financial statements, the effects of which are pervasive in nature. I'll again repeat, the auditor will issue an adverse opinion when material misstatements are present in financial statements, the effects of which are pervasive in nature. Okay, now auditor will issue disclaimer of opinion. Auditor will issue disclaimer of opinion when there is lack of sufficient and appropriate audit evidences and the effects of which are pervasive in nature, but not effects, the possible effects of which are pervasive in nature. Now let's discuss about the qualified opinion. When I say qualified opinion, you have to mix these two boxes. So an auditor will issue a qualified opinion. When there are material misstatements present in financial statements, the effects of which are not pervasive in nature. I'll again repeat, qualified opinion. An auditor will issue a qualified opinion when material misstatements are present in financial statements, the effects of which are not pervasive in nature, or there is lack of sufficient and appropriate audit evidences and the possible effects, not effects, the possible effects of which are not pervasive in nature. Let me repeat. An auditor will issue a qualified opinion when there is material misstatement present in financial statements, the effects of which are pervasive in nature, no, the effects of which are not pervasive in nature. Okay, so let's start from start. An auditor will issue a qualified opinion when there is material misstatement present in financial statements, the effects of which are not pervasive in nature, or the auditor will issue the qualified opinion when there is lack of sufficient and appropriate audit evidences and the possible effects of which are not effects, the possible effects of which are not pervasive in nature. If we merge these two boxes, then it will be called as qualified opinion. I hope you got it. Now, in the professional judgment of the auditor, effects on FS are, in the professional judgment of auditor, the effects on FS are not confined to specific elements, then it would be called as pervasive, represent or could represent substantial portion and fundamental to users understanding, then it is called as pervasive, otherwise not. Adverse opinion, disclaimer of opinion and qualified opinion, I have told you the definition, that is only written over here. Now let's discuss about ISA 701, communicating key audit matters in the independent auditor's report. Let's read one definition so that you are sure that whatever we have studied is correct. So when material misstatements are present in financial statements having pervasive effects and when FS do not give true and fair view. Now ISA 701, key audit matters. What are key audit matters? So say key audit matters are matters of most significance in the professional judgment of the auditor. Okay, auditor's professional judgment were of most significance in the conduct of the audit of the current year. These are taken from matters that are communicated to TCWG. So matters communicated to TCWG and these are CAM. So out of total matters, CAM are taken. I hope that is clear. Now must be included for the audit of listed companies, that is mandatory for audits of listed companies, Now why CAM? So provides greater transparency and increased communicative value of the report. Communicative value of what? Communicative value of the report. Okay, provides greater transparency because now auditor will have to mention that what are the most significant areas in the professional judgment of the auditor. Now even if that is not framed part of the report, but whatever were most significant areas, at least the general public, the users of the financial statement will get to know about it. Now CAM is not a substitute for modified opinion. That is, if you want to give modified opinion, you will have to give the modified opinion. You cannot do so that you have mentioned it under the CAM and you have said that since we have mentioned it under the CAM, we will not be able to give the modified opinion. Then reporting on going concern, that is, if you want to report on going concern, you have to create a separate paragraph of going concern. You cannot just mention it under CAM and you will have to modify the opinion. Okay. Now issue a separate opinion on individual matters, that is, you cannot do so that you have issued the overall opinion as unmodified, but you have modified certain parts in the CAM that this particular thing is not appropriate. When the auditor disclaims an opinion, that is, issued disclaimer of opinion, CAM should not be included in the auditor's report unless required by law. So now let me tell you by reading this part. Let us just have a quick summary by reading this part, the table that we discussed about. Now let's discuss it. If everything is wrong, which opinion will you issue? Adverse opinion. If you are not being able to obtain the evidences, management has not submitted you the evidences, which opinion you will take? The disclaimer of opinion, right? And then if something is wrong, something except for subject to, then qualified opinion is issued. I hope that is clear to you. Yes, any questions so far? No. Great. Now Determining CAM. How do you determine CAM? So matters that require significant auditor attention, like areas of highly risky areas and significant auditor judgment was required. Communication to users, separate section in the report is there. CAM section is there, and CAM along with auditor's responses is there. That is, you have to mention the audit procedures also. That is, you have to mention the audit procedures also. You have to mention the audit procedures also. This is very, very important to understand. Now in exams, answer should include what is the issue, why it is a CAM, and how it was addressed. That is, all three needs to be mentioned. This is the only area of the report where you need to mention the auditor's report also, no, auditor's actions also, along with the detailed report. Okay, now ISS 706, which is emphasis of matter paragraphs and other matter paragraphs, EOM and OM. So emphasis of matter paragraphs are used to inform about certain things which are very fundamental to users understanding, and you have to give reference to the relevant note of the FS, whereas other matter paragraphs are for additional information and no relevant FS note is required. So matters presented in FS, matter fundamental to users understanding, clear reference to relevant note in FS, and example, early application of a new accounting standard, that is very fundamental to users understanding. No, that the company has early adopted one standard. Now OM paragraph, matter not presented in FS, matter not fundamental to users understanding, no reference is a must. Example, disclosure regarding willingness to withdraw but unable to do so because of law. This is an additional matter. But there are certain points which are common to both. Neither paragraph affects the audit opinion. Placements depends on the nature of the information, that where it would be placed in the audit report. Now new auditor may refer to predecessor auditor's report in OM paragraph if allowed by law. That is, for example, like we discussed, that if previous year report is unaudited, previous year financial statements are unaudited, what you can do, you can politely mention it under other matter paragraph that the last year's FS is unaudited and we have just used it for the reference purpose. Now reporting on LCE. Reporting on LCE. What is LCE? What is LCE? LCE as in less complex entity. LCE as in less complex entity. LC as in less complex entity. So all elements would be same. Main difference is that basis for opinion will state that the audit was conducted in accordance with ISA for LC. ISA for LC includes a table specifically for circumstances when audit opinion is to be modified and for types of opinion that may be expressed. So ISA for LC includes a table specifically for circumstances when audit opinion is to be modified and for types of opinion that may be expressed. Now with this we have completed the entire syllabus. You can see there's a QR code to connect with me on YouTube, Instagram and Telegram. If you have any doubts, please feel free to scan this QR code and do feel free to reach out to me to discuss any of the doubts, queries or anything. Okay, please feel free to scan this QR code or you can search me by typing ACCA with CA Supreet Agrawal. I hope this revision session was a fruitful session for you, and if you have any queries, please feel free to reach out to me. Otherwise, I would be happy to reach out to you on Instagram as well, Telegram as well, and you can feel free to reach out to me.